Welcome, everybody, to episode 6 of Foundations to Fortune. We are so happy for you to join us. This has been a great adventure so far for doing podcasting. I love it. It's great to bring on great guests who can share their experiences and knowledge and help educate those that are listening to this episode. So grateful to have everybody. Please give us any comments, feedback. We love to hear from those that listen to the podcast. So today we have Todd Jackson with us, and I'm going to let Todd kind of introduce himself too. But Todd is someone that we've known for about 19 years, because we've been here 19 years now, and I think we met Todd like a year after we moved here or something of that sort. So known Todd for a long time. Todd is a real estate attorney, and I'll let him tell you everything else he does. So,
well, appreciate it. Thanks for having me, Ryan. This is cool. Good to see you again. Mm-hmm. I'm kind of a weird combination of things. So I guess it's ADHD or something. But so by trade, I'm an attorney, tax attorney, real estate attorney, business attorney. But along the way, I've kind of developed an area of adding to that, because I try to just focus on one universe of things and not try to be all things to everybody. But that involves, so I'm a 1031 QI for doing 1031 exchanges. I'm actually an agent. I don't really act as real estate agent for others, but mostly I'm kind of my own deals. M&A advisor, and of course a tax lawyer, business lawyer, real estate lawyer. So I have always been in the obscure areas. So from a very early, from when I first started my career, I just never had the personality to be the guy that kind of did the normal mainstream stuff.
Yeah.
I've, from day one, always kind of been the one that did the things that most people didn't know were a thing, is what I seem to gravitate to, and mostly related to taxes. Yeah. Because everybody hates taxes.
Yeah.
And so even in MBA school and law school, I had tax classes where I was the only student in the class. Yeah. And my friends were like, "You're an idiot. What are you doing taking these advanced tax classes?" Yeah. And it stuck. And so now I spend most of my time working out tax situations for people across the country. Yeah. And because it's kind of like, let's get Mikey. He'll do whatever. California, Texas, New York, it doesn't matter. I'll get calls from people say, "Listen, we got this situation. I got your name from such and such. Can you help us?" So anyway, that's kind of a long way to get around to what I spend my days doing. Mostly is solving tax problems for people.
So let's talk a little bit about, so you grew up in North Carolina, right?
Well, so actually, I've kind of been all over. So I was born in North Carolina.
Okay,
so I'm a
born in North Carolina.
I'm a native Tar Heel, but my family moved out west to Salt Lake City, Utah, when I was 4 for business. So I was raised in Salt Lake City, and when I was 20, I was out of the country for a couple of years. My family moved back to North Carolina, hoping that I wouldn't find them. Yeah. I came back from out of the country, found them. So followed them to North Carolina, finished my undergraduate, and then did MBA school and law school. Started my career there. Yeah. Worked for about 5 years, and then I've been in Nashville now for 28 years.
Yeah. So Wake Forest?
Wake Forest,
that's where you...
MBA school and law school at Wake Forest, yep.
Yeah. So that's interesting, MBA and law school, because I tell a lot of people, I'm like, okay, when you talk to Todd, not only is he a real estate and tax attorney, but he's also an MBA, so look out.
Well,
he's a double threat.
I was not going to be an attorney. I was in MBA school, and got really close to one of my professors, and we were talking about what I wanted to do. And I've always been about deals. I do deals, right?
Yeah.
Transactions. And he told me one time, he said, if you really want to do the kind of stuff you're talking about, you need to be an attorney. And I said, I'm not going to be an attorney. They're a bunch of idiots. And so he had, this is 100 years ago, he had the Fortune 500, the actual magazine, not an iPad, but the actual magazine on his desk. And once a year they do the bios of the CEOs of the Fortune 500.
Yeah.
He said, take that home with you. He said, when I see you tomorrow, I want you to tell me how many of those CEOs are attorneys. And I thought that was strange, but I take it home. Over half of them are attorneys of the Fortune 500 companies. He said, not because they practiced law, but they did that because it helped them in their business.
Yeah.
So he convinced me, so I ended up doubling up and doing both, doing MBA school and law school, adding that on and finished both in 93, so 32 years ago.
Yeah.
Long time ago. Yeah. So that's how I ended up being a lawyer. It was kind of by accident or backing into it.
Yeah. Yeah. So what brought you to Nashville then?
So my parents always had their own business, and I was with a firm that was a highly coveted position. We were doing IPOs and the highest level stuff in a fairly small firm. And so a lot of folks in my class wanted that job. I got it. It was a good fit for me. About 5 years in, I remember proofreading a letter that I was about to send out. And at the time, we were talking about partnership and all of that. And I glanced down at the letterhead, and it just hit me. As long as there's a stack of names on top of mine on that letterhead, I'm working for somebody else.
Yeah.
And literally that day, I told my mentor, I said, I'm going to do something different. And it was really that fast. It wasn't something I thought about for months. I mean, it just hit me. And so kind of thought what I was going to do, decided I was going to come to Nashville. Didn't know a person. And just kind of started my own shop. And I've been here for 28 years. And so far, so good.
Yeah.
I'm not done yet.
Treated you well.
It's been okay. Now, it doesn't hurt that Nashville has been on a tear for the last, 15 years or so.
Yeah.
But it's been a good fit. So it feels like it's home. Yeah. And I've been here longer than I've been anywhere.
So have you always done the tax piece, even from day one when you moved here?
Actually, before that. So when I was in college, undergraduate, when computers were just barely becoming a thing, to help me get through school, I did payroll for companies as a side gig. Mm-hmm. Did their payroll taxes and ran their payroll and all that stuff to help with school. And so that was way before. And again, my friends, you doing what? You're doing payroll taxes? Yeah. It's just always been my thing. So I've always had kind of a focus on anything to do with taxes since as an undergraduate.
Interesting.
Some people, went out and went to parties and did fun stuff. I did taxes.
And you don't even wear glasses and have one of those, pocket.
The pocket protection. No pocket, so I had to leave that home today. No pocket protection.
Yeah. To be different than everybody else. So
that's right.
Yeah. And I know when we first met you, at that time it was all around kind of real estate, related, all of that. And I will give a disclaimer that, Todd has helped us on, many real estate deals, and business deals, as well, from that standpoint. So, and we've helped Todd buy some stuff and sell some stuff as well. So as a disclaimer, we know a lot about Todd and can vouch for all the good work that he does from that standpoint. But I know when we first met you, it was all about real estate.
Yep, I've done a whole lot of real estate over the last 3 decades, and of all kinds. 100% of my clients are real estate investors or business owners. Yeah, that's just what I do, and I do some real estate transactions and some business transactions. But in recent years, most of my focus has been on those same clients that are exiting, selling a business, selling real estate. Yep. And the good news is that they've got large gains. Yep. And the bad news is they've got large gains.
Yeah.
Right.
Yeah.
So I spend all of my time working on tax deferral.
Yeah.
Capital gains tax deferral of all sorts,
Yeah.
right? So sometimes that takes the form of a 1031 exchange to do.
Yeah.
Sometimes that takes the form of other deferrals. There's lots of available in the tax code that help people take advantage of. But at the end of the day, it's a pay now, pay later proposition.
Right.
So everybody that's facing a big capital gain, they just say, listen, you owe the IRS $1 million.
Yeah.
Do you want to pay them now or 20 years from now? And
Yeah.
everybody's going to say, well, if there's no strings attached and I can really pay them later, yes, I'd rather do that in future dollars. Yeah. And that's what I do.
Well, let's. I was gonna save this for a little later, but I think we'll dive into it because we can probably talk about it for a long time. And that was I remember before we moved into this office, we were in an office downtown, and I remember sitting down with an investor client that was that we just sold some property, and then he was looking to maybe purchase another property. However, he was worried about the time frame for his 1031, and so we were sitting eating lunch, and he said, the 1031. I'm worrying there's not enough properties available. And he said, but I was talking to this real estate attorney, and he was telling me about this product, and I was like, oh, like Delaware statutory. He's like, no, not that. It's different, And I said, oh, so a real estate attorney? And I was like, where's he located? And he's like, oh, down in Franklin. And I was like, wouldn't happen to be Todd Jackson, would it? And he goes, yeah, that's it. And so you probably remember this.
I do.
As soon as we got done with that lunch, I called up Todd and I was like, Todd, I've known you like 15 years and you've never told me about this. And that was kind of the first time I'd heard about that.
Yep.
And I was telling my admin here kind of about that story. But about the story when the first time I had you come and speak at some of the education that we provide here, and there were some CPAs in the room, and when we started talking about it, and you were saying, "Hey, this is something that's available, and it's in the IRS code," and they kind of started challenging you, and so you had to kind of show them where in the code it was, and that so many people don't know about it.
Just using the tax code in ways that most people haven't made a logical connection with, right? Yeah. So, for example, in a 1031 context, the reason that most people are afraid of a 1031 is they're worried about those time frames. Oh, if I don't find something in 45 days, it's the end of the world, and all of this. What most people don't know is that even if you start a 1031 and you're not able to locate property or you're not able to buy the property that you identified, a failed 1031 exchange becomes, and this is IRS that does this, becomes an installment, right? Which means that you're no longer in 1031, but you automatically are in Section 453, which is the installment sale section of the code, which means that it's still in a deferred mode, but until they receive the money, it's not taxed yet. So it leaves an opportunity to continue that deferral over a longer period of time. So it changes the whole outlook on a 1031 exchange. So the people that work with me go in, and instead of feeling like they're forced, oh, I've got to buy something or this horrible thing happens, right? They know that if they don't find something that they love and they really want to buy, they still have a backup plan, right? I don't know what there's no way to know what this real answer is, but I would guess that probably more than half of the people that buy property in a 1031 buy property they don't want to buy.
Yeah.
But they're afraid of the tax consequences, so they just buy it just to get the thing done. Clearly a bad business plan, right?
Yeah.
You don't want to buy something you don't like or doesn't make sense. So instead of feeling like you're forced to do that, you've got another option to continue that deferral and do something else. It might still be real estate, but in a structure that allows you to do to continue that deferral to where you still get the same tax benefit over time. So that's and it takes lots of different forms on how you get there, but the concept is the same, which is that you're not automatically prevented from taking advantage of the tax deferral just because an exchange fails. So that's in the exchange context. In other contexts that don't involve real estate, concept is the same, right? We use the tax code. We can create structures, deferrals that allow people to take gains, capital gains, that they were otherwise going to pay now and create deferrals. And it's just a deferral, right? There's no part of this that's an exclusion, or this is not the Al Capone School of Tax Planning, right? So this is, the taxes are going to be paid at some point. It's just being paid over time. So you've got the benefit of paying later, time value of money concept, and having money invested, your deferred tax dollars being invested in the meantime to generate some income. IRA is a deferral, 401k is a deferral, 1031 exchange is a deferral. All of these are deferrals, right? So clearly the IRS knows there's deferrals. They like deferrals. So if you think like the IRS for a minute, people say, well, why would the IRS be okay with deferrals? Well, you got to think like they do. So if I'm going to do a $100,000 deferral now, they say, well, if we don't allow this, we're going to get taxed on $100,000. If we let you defer that and that grows to $1 million, guess what? We're getting taxed on $1 million. So it's not all selfish on their part. They see the benefit to them, but there's just as much benefit or more to us to create the deferral.
Yeah. And so, and then also correct me if I'm wrong, but where the 1031 does have the 45 days, and then you have to close, 180 days.
Yep.
On, the other kind of deferrals, and on 1031, if they're selling, example, if they're selling real estate, then they have to, on that 1031, they have to buy like kind if in the 45 days.
Yeah.
Right. But in the other deferral that you're kind of talking about is that if they sell real estate, they could buy something else.
Yeah.
They could buy a business, or they could buy everybody's favorite crypto.
There
or
you
something. Go. That type of deal.
Yep.
And I remember we sold an apartment complex, about 100 units, and there was family involved, and two of the three wanted to do either a 1031, but at that time they were a little nervous about whether they were going to find properties. And so I know we made the introduction to you so you could help them set up not only if they wanted 1031, but also maybe if they didn't find it, then you could still do the deferral for them on a different, a different way. But it doesn't always have to be like kind for real estate or real estate, right?
Yep. So the 1031s are awesome. Clearly, I do them every day.
Yep.
But the restrictions, the 45 days, short window to find something, 180 days to close on it, has to be real estate. There's no door number two. You're buying real estate, period, right? There's no other option. All of those things are requirements in a 1031. If we're doing another deferral that's out of 1031, none of those apply, right? Yeah. And another big one that comes up all the time in a 1031, I'll give you a good example, is replacing the debt. Most people think that in a 1031, if you haven't done one before, you think, real life example. Guy calls me, says, I'm selling a building in Nashville for $20 million. I've got $10 million of debt, and my tax basis is about $10 million. So I'm going to have a $10 million gain, and my cash at the closing is $10 million. I want you to do a 1031 so I can invest that $10 million in something else. And I had to give him the bad news. No, you're not going to do that. If you do an exchange, you're going to buy something for $20 million, and you're going to get $10 million of new debt. He's like, well, I want to get out of debt. I said, then you're not going to do a 1031 because that's part of the requirements.
Right.
And he said, well, I'm not going to do that. He said, I still want to sell the building. What are my options? So we talked about the other deferrals that we can do to where if it's not part of 1031, replacing that debt isn't required. So we were able to take the $10 million in his gains and invested in other things, and we could, we had that deferred. Exactly what he wanted. He just thought it had to be in a 1031 for it to work.
Yeah.
And it didn't.
And kind of the same concept in those scenarios is that they can't take they, at closing, that money doesn't go to them; it would go to you.
That's right.
An intermediary, right? So, same kind of concept. You're the one that's holding their money, not maybe your your
I'm
company.
responsible for it.
Yeah,
I manage
you're
it,
responsible.
right?
Yeah, you're the one that has that, but yet they still can have control over what they want to maybe spend that money.
They have to
right?
approve all the investments that are done,
yeah.
just like any lender. So every deferral has a similar concept, which is if you don't receive the money, well, that's a requirement. If you receive the money, that's the end of the conversation.
Yeah.
The IRS has got you.
Yeah.
Right. Here's your tax bill. So just like a 1031, you can't get your money and then do a 1031. It has to go somewhere else and not pass through your hands. All deferrals are like that. IRAs and 401ks generally, if it's coming out of your paycheck, it doesn't go to you first, and then you. So that's kind of the key. And then while it's until they get it, right, that's where the deferral comes in, just like a 1031 or anything else. Until they get it, then it's still tax deferred and invested and all that, and only when they get the payment or the money over time, that's when they're recognizing the taxes and paying their taxes, right, on just what they got, not on the whole thing. Yeah. Not really any different than all the other deferrals that most people have, IRAs, 401ks, and pensions, and all the other things. So, and that's the whole idea, right? Is you're able to spread that out, pay it over time, take advantage of some time value calculations, and paying later instead of now. And the what that it's invested in the meantime to generate that income for them, there really isn't any restriction if you're outside the 1031, right? 1031, you've got one option, that's real estate. Yeah. In other deferrals, it doesn't matter. It could be anything at all.
Yeah, and I remembered when I first heard about this, I was like, wow, this is absolutely kind of mind blowing, that. And I remember calling you going, so why haven't you told me about this? And you were like, well, because usually everybody always does 1031. It's only now where properties are limited that, that people can, or not can, but people are kind of taking advantage of this other option in the, the IRS code. And I remember talking to you, I don't know if it was last year or whatever year, I think you had mentioned you did about 60, some of them out of about 60, I don't know how many of them you did that year just alone of these deferrals. And so obviously the word's getting out that this is an option that is available, with the limited number of properties or with interest rates going up and, a lot of that kind of stuff as well. So I'm sure it's not slowing down any for you.
Yeah, the market generally is busy. So, just like you are, busy on real estate, busy on 1031s, busy on other transactions. So it's just, and a good part of it is a function of how busy the area has been. Yeah. In Nashville, everything's busier. Yeah. So I stay pretty busy on these things for clients.
Do you see more, people as they are, as you call it, exiting, maybe exiting, okay, I'm getting 70, I want to sell all this real estate, or even on the business front where they're selling the business, the kids don't want to buy the business, right? So then it's like, okay, what am I going to do with all this money now?
Yeah.
Right?
Yeah.
So do you see more now that more of those in the, I'd say, some of us seasoned people that are getting a little
I think so. And part of the reason is because in generations past, it was pretty common that the kids, let's say, would take over the family business.
Yeah.
Now you almost never see that, right? So you get people our age, like 100 years old, and they're like, the kids have no idea. They want to run a barista coffee shop or something. They don't want to get in the family business. Yeah. So they're going to sell it to somebody, right? So there's a whole lot more transactions. And obviously, if this is something that they've built over these years, they're going to have a huge gain. Yeah. And particularly with business sales, you don't have really many options, right? If you're selling real estate, you may not want to do a 1031, but you can. Yeah. If you want to, right? If you got the business sale, there is no 1031 for a business sale option. So you're limited unless you're just ready to write the check you kind of have to work within what's available. And so I've got a whole lot of folks I work with that are business sellers, and it just happens that since that's kind of, just like your space, that's my space, and so there's always something going on, right? And so that's very common.
Yeah. Yeah, because that's a great thing to do on mine. A lot of times for us too, if they're talking about wanting to sell business, and they're like, what do we do with what do we do with this money? And we're like, well, hey, there's always real estate we can help you buy, right? You help them defer that, which is great. So, but I know it's that deferral part is a large part of your business now.
It is, yeah, and it's very, it's kind of it's technical. It's not really complicated, but it's technical. It's using what's already there in the tax code in a very specialized way that just isn't just not mainstream, right? So which is kind of how I always operate. There's this stuff that's just not the plain vanilla. I don't know why I can't be normal, but I'm just not normal.
So I know on that example I kind of used about the family, the three siblings, and that ended up selling. I remember us kind of telling them about the concept and introduced them to you. And I remember they said, yeah, we went and talked to Todd, and he told us about it. And so then, two of them lived in California, and they were like, yeah, we went and we talked to our CPA down in California, and our CPA is like, that's not possible. You can't do that. And I remember they said, yeah, Todd said, well, just, let me know their number. I'll call and talk to them and kind of explain to the code. So how common is it that CPAs just don't know this?
Well, it's
or is it they know it, but they just don't know what it's called?
They know it. They just probably haven't seen exactly how it's implemented. Yeah. Because once I talk to them about it, they're like, oh, I know what that is, right?
Yeah.
I'm using this code section and we're doing this. It's just generally when they first hear, they probably hear something that doesn't really sound like what it is I'm doing. So
like
they're
it's
like,
legit.
That doesn't make any sense, right?
Yeah.
But once I talk to them, they're like, oh, yeah. What's the problem? That's perfectly fine. So we can always get them there once they really understand what it is that we're doing. And for those folks, and this is very, very common there, you've got people in a company together, right?
Yeah.
Family or not. And you've got 4 owners, let's say, in a partnership of some sort. And everybody has different plans for what they want to do.
Yeah.
And sometimes they feel like they're trapped, like they all have to do exactly the same thing. Right?
Yeah.
And that's not true. I mean, there's lots of ways I can create a divorce of sorts of the owners. Everybody can do their own different thing, but accomplish their individual goals. So that's very common. I do that a lot.
Yeah.
Help people get there.
That's good to hear that. As soon as you kind of explain it to the CPAs, then I'm sure the vast majority go, oh, okay, yeah, that's all right, I get it. Or are some of the CPAs like, nah, he's going to take part of my money from being a CPA?
Not really, because it's not anything to do with them. They still do continue doing their tax returns. It's just making sure they understand how it applies to their client and the reporting, and I work through all of that with them. So I spend at least every day, probably multiple times a day, talking to CPAs, tax attorneys, M&A attorneys on transactions about this piece of it, because it's just not what they do every day. It's not that they're dumb. They're way smarter than I am. They just don't do this piece. And so, but once I say, here's how it works, everybody's like, oh, yeah, I get that.
Yeah. So how long out of law school did you kind of go, hey, there's this other kind of deferral part that maybe we ought to look at? I mean, when did that really kind of click in and then become a real kind of part of your business?
So I've always been involved in transactions and the tax implications of transactions. and 1031s were part of that. I was
Yeah.
working on those right out of law school, and my first case that I got handed the day I got on the job at law school
Yeah.
was tax related. So it's like they were just waiting for me. They knew I had a crazy tax mind. We had a client that their jet went down with some of their clients on board. And so my job was to design that settlement with the families in a way that was tax advantageous to our client.
Yeah.
As morbid as that sounds, it's a business transaction. And so it's that, like I said, the obscure tax stuff that just most people don't really give a whole lot of thought to is the space that I operate in that people just say, well, I don't know what that is, or I've never done that before. And so usually it'll come around to where eventually people will find me because they talk to their CPA and they'll say, well, I don't really know, but I know a guy. And I'm fortunate enough to end up being the guy most of the time because it's a very, very kind of a niche that not a whole lot of folks really do it every day.
Yeah, I agree with that. And it seems like every time I have you come and speak at our learning series or some of the other educational, we always have a packed house because it's your reputation is kind of getting out there about what you do and what this is, and particularly these investors because they want to hear about this, right?
Well, everybody wants options, right?
Yeah,
nobody likes to be stuck and they don't have options.
Well, and I think it's to your point earlier that you made where the investors, they want to have those options so that if that 1031 doesn't come to and they can't close on the property they don't want just any property. To your point that you made earlier is that instead of just buying something they really didn't want to satisfy that 1031, now they have that option. But a lot of those investors are like, hey, I want to hear about this, right? And they do, and that so a whole lot of them will work with me, and let's say we'll do a 1031, and 1031 works out great. Yep.
But it's just another 1031. There's not anything different about it. But they know that they're not forced to do something they want to. They have kind of that backup. Right. Most of the time they don't need it, but it's always nice to know that they have a way to maybe still work forward with that on a deferral basis. So that just gives them some comfort. It doesn't feel so stressful. The worst thing about a 1031 is the time frame. Everybody will tell you, oh, it's just so stressful. Yeah. Well, I kind of take that off the table because we know it's not the end of the world.
Well, and I think that's what you help our clients that in the example I've been using on this podcast is I think that's what they appreciated is, okay, Todd gave us options, right? So now we know if, we want to do this 1031, but if it doesn't work, then we have an option.
We got a backup.
Yeah, yep. we have a backup. So tell us a couple of the craziest stories when it has come to some of the tax, whether it's this kind of deferred tax or anything else. Tell us some, people, our listeners love to hear, some of the crazy stories that happen.
Well, so I've got one I worked on recently with a music artist, we'll say, that and it wasn't here in Nashville, it was actually in Atlanta. Yeah. And his songs were in a whole lot of stuff that everybody would know who it is. And every place that shows up, of course, he gets a royalty.
Yeah.
And so he had one of the largest music companies approach me and said, listen, we're tired of paying you royalties. We're going to buy your music portfolio so we can pay ourselves, essentially. And so that was going to be about $80 million. And so he called me, got my name from his attorney, and said, here's what's happening. Come see me, and let's talk about what my options are. He says, I don't need the $80 million right now. I don't want to pay tax on $80 million that I don't need at the moment. So we worked out a plan for him for some deferrals of that, and he's actually done another transaction since that with us. So it's funny how The world's pretty small.
Yeah.
And I've done some tax work with some movie stars, professional athletes. Not surprising because they have the most money, so they have the most motivation to try to
find options
to plan around it. So
yeah.
it's fun. It's never dull. It's kind of fun to. I love the complex situations.
Yeah.
Not the straightforward stuff.
So, yeah. Those you can just do on the back of a napkin and get them done. And yeah.
It's fun. I'm like I said, I'm kind of weird that I like that kind of stuff, but somebody's got to do it.
Yeah.
Why not me?
That's right. So since we're talking a little bit about 1031s, so a lot of people don't understand what a reverse 1031 is, including myself. Oh my God, I've got somebody that's doing one right now, or looking at doing one right now anyway. And so they called me and they're like, "Hey, what's this reverse 1031 thing?"
Yeah.
So I was like, "This will be perfect because I got Todd on.
There we go.
I'll ask him what because everybody knows what the regular 1031 is, but what's the reverse 1031?
Right.
What is that?
So there's not such a thing as a reverse 1031 exchange. There's a reverse accommodation. All right.
Okay. All right.
There's only one exchange.
Okay.
But you can set the stage to finish a 1031 later in reverse. Right. So here's how it works. So if I do a 1031 exchange, I'm going to buy replacement property from what I sold. That's the basics of a 1031.
Right.
Now, I can't buy property from myself because I already own it. So let's say that somebody is selling a property, it hasn't sold yet, and they plan to do a 1031, but the property they want to replace it with and buy is only available for a shorter amount of time, and they have to buy it before they sell the property. So clearly they can't buy it with that money because they haven't sold it yet. So they can set the stage for that 1031 by buying it ahead of time, but they can't buy it because they can't buy it from themselves.
Yeah.
So we would create an accommodation, which means we're going to create a new parking company, we'll call it, that is actually going to buy that property, all right? And it's got to use borrowed money or that person's own money lent to buy it because the money's not there yet from the 1031. So we'll buy that in the parking company, be waiting for them to start their exchange, and then as soon as they sell that property, then they've already identified this as what they want to replace it with, and they buy it from the parking company. Now they've completed their exchange. So the time frames are the same, they're just reversed. So if normally you've got 45 days to identify a replacement and 180 days to buy it, that still applies, but it's from when you actually bought that first reverse property, you've got 180 days to sell your property and buy that under the 180 days. So that's why it's all reversed. All the time frames are reversed.
So when you're talking about kind of the parking, is you have to set up like an LLC or somewhere?
It's just a simple,
that money or something.
Simple LLC that my 1031 company, accommodation company, will do that because it's got to be owned by somebody other than that seller.
Yep.
And so it's just it's owned by this temporarily until they buy it from it. Yeah. Really, what it is, and that's how we set the stage to create the reverse. So most of the time, people can work it out in the right order, right? Yeah. And sometimes I'll get calls from people and they'll say, "Well, I might want to do a reverse," and I'll be talking to them about the time frame. And sometimes they can get the one that they're buying to maybe extend a little bit with a little bit more earnest money or something, to where they can just do a normal exchange, so they don't have to go through that whole thing. But sometimes they don't have any option; they have to buy this before they sell. And that's when we'll set the reverse up.
So how on board are most lenders for the reverse? I guess you call it accommodation.
Yeah. So that's probably the number one sticking point, right? Because now there are lenders that do this all the time, and so when somebody calls me to do one, I ask them who their lender is, and if it's just their normal mortgage lender, I say you're wasting your time. They're never going to understand this because they're going to want them to own the property if they're going to loan money on it. Yeah. They're not going to understand that this other company owns the property and not this person, right? Yeah. It just is lost on them, so they can't get the loan done, even though they're still going to guarantee the loan. They still have a mortgage, a deed of trust, a lien on the property, just like they would otherwise. There's really no different, but they just don't understand how we have to do that. And so there's lenders that do it all the time. And so usually if somebody's trying to get their normal local mortgage company to do it, I'll give them the name of some of these that do it all the time.
Yeah.
And it's never a problem, right? The only time it is a problem is if they can't get a loan for whatever reason,
Right.
and they don't have the money available otherwise, then obviously they can't buy the property without the money.
Yeah.
But most of the time people have means to get that done.
So for our audience, most people probably know this already, but if you're going to do a 1031 exchange, you need to have arranged that with Todd ahead of time. So it isn't that you call him the day after and say, Todd, I just closed on this property. I want to go ahead and do a 1031.
Yeah. I do
Kind
get
of too
those
late.
calls.
Yeah, you get those calls. It's too late.
And to our point earlier, if you're holding that money, it's game over, right?
Yeah.
I can't help you with that.
Yeah.
So yeah, it's for a 1031, it doesn't take weeks or months, but I do need to get that in place before you sell. So
Yeah. So have you had people call you at the closing table and go, you know what? Oh my gosh, I forgot to get my 1031 set up.
all the time. So we've got a good relationship with all the title companies in town. They know who we are.
Yeah.
And on occasion, they'll call us literally from the closing table and say, listen, this just came up. Can you get this done? And we're nimble, and we'll get it done, get them what they need to sign, and while they're still there, and we'll make it work.
Yeah.
Because, of course, the key is that has to be done.
Right.
And then they can't receive the money. It's got to come to the 1031. But
Yeah.
now we prefer to at least have a day's notice or more.
Yeah.
But it does happen sometimes.
Yeah. Yeah,
and we're
yeah.
not going to tell them no. If we can get it done, we'll get it done because it can make a huge difference for people selling.
Yeah. So just ask me how I know that. Because I had somebody who's like the day before call and say, I think I want to do a 1031 now, right? And all the titles have done all this work and everything else, and they're like, hey, then we represented the seller, and he's like, hey, I want to do this 1031. I'm like, oh, sounds like I need to get on the phone with Todd to get that done. So yeah, Todd can, like you say, Todd's very nimble getting that kind of stuff done. So I know that has happened. That's why I asked the question. So.
We hate to say no. The only time we have to is if it's already done and they already have the money. Then I'm pretty good, but I can't fix that.
Yeah, you're good at all the tax pieces, but not that one.
Not that one. Nobody can help him with that.
Yeah. So what other kind of crazy tax things have you seen over the years?
So I do a lot of work with still in the tax area with self-directed retirement.
Okay, tell us about that.
That's another thing that, again, I seem to always gravitate to the stuff that most people don't know is a thing, right?
Yeah.
So if you've got an IRA, right?
Yep.
Your IRA can buy real estate. You've probably never been told that, right? And 20 years ago when I started doing this, zero people knew about it. Now it's a little bit more known, right? People hear about it and with the internet and all that stuff, but still most people don't have any idea. And that's not because there's any sinister motives, but if you're with Schwab or Fidelity for IRA, they've got no reason to bring that up because they're not real estate people. They can't really do that, so they don't bring it up. But if you find out about it and you say, hey, Schwab, Fidelity, I've heard I can buy real estate with my IRA, they're probably going to say, well, no, you can't do that. And you're going to say, well, I'm not a dummy. I know I can do it. And they'll say, well, yeah, you can, but you just can't with us, right? Because that's just not part of their structure.
Yeah.
So there are IRA custodians that are self-directed IRA custodians, which are not brokerages. You can't do stocks and bonds and mutual funds and stuff with them.
Yeah.
They're strictly for self-directed, which means that you can still, in your IRA, do that stuff if you want, but you can do all these other things in the whole world that most people didn't know you could do, right?
Yeah.
So, and since the tax code doesn't say what you can invest your IRA funds into. Everybody thinks it does.
Yeah.
They think there's some magic list that says stocks, bonds, mutual funds.
Right.
Those happen to be the things that the brokerages make commissions on. That's not the tax code.
Right.
The tax code is the reverse. It actually has 4 things that you cannot buy in your IRA. Everything else on the planet is allowable.
Yeah.
Right?
What are those 4?
So
now that you said that, I'm curious.
collectible coins, not
Yeah.
that gold bullion and silver is not fine. They don't
Right.
want the 1902 penny that, Lincoln had a funny hat, just the weird, the weird stuff, right?
Yeah.
Artwork. They don't want your art collection, speculative type of in your IRA. Most types of life insurance, they don't want in your IRA. And my favorite, alcoholic beverages. They don't want your wine collection in your IRA, right? So outside of those four things,
Lauren,
your IRA,
Lauren, you're out of luck.
she's
just kidding.
She's stuck. Everything else in the whole world
Yeah.
is an allowable investment. So
Yeah.
people do buy real estate. People that don't want to own real estate, a lot of people do hard money lending
Yeah.
to real estate people. So your IRA can be a lender, right? It can buy into private businesses. It can do. I've got one that's really interesting, and he was one of the very first ones I did 20 years ago. And most people do what they know, right? They do what they have always done. And this guy knew muscle cars. That was just his passion and his hobby. He can't do it himself because of the IRA rules, but he funds a guy. His IRA provides funding to a guy that restores old muscle cars. And so he, essentially lends the money to buy the car and pay for the restoration, and then gets back his return from that after the car is sold. And over the last 20 years, the return to his IRA on that has beat every other person I've ever worked with. And I've worked with a whole lot of people over doing that.
Wow.
Yeah.
That's interesting.
So the things that you wouldn't think of, right? And I can guarantee that nobody anywhere ever said, hey, here's what you can do with your IRA.
Yeah. You can go out and buy these or, Wow.
So that's
Be in the
that's
muscle
kind of
car
another,
business.
Kind of a obscure thing that I do that I've done for a very long time. That again, I've never advertised that. People just
I would think there's a lot of people that don't know about that one.
most people don't.
Yeah.
People don't. So, and I get a lot of that business from investment advisors, from brokerages. Believe it or not, because I'll give you one story about that. So, I had a guy that called me, and he got my name from a CPA, and he was from Tennessee, but he was a very high level executive at Time Warner at the time when it was Time Warner in New York, and he was retiring, and he had $5 million in his 401k, and he had heard from his CPA that he could use some of that to buy real estate in his IRA. And so he calls me and he says, hey, I'm thinking about doing this, buying a little condo down in Franklin. Let me see how this whole thing works. He needed $200,000 or something way back, right?
Yeah.
Which is a pretty good price for a condo back then. And so I called his guy at Fidelity. Not going to name any names because he's right here local. And I said, here's what we're doing.
Yeah.
Right?
Yeah.
And so the guy essentially hangs up on me. and he calls, calls the client and says, what are you doing? The guy says, what do you mean what am I doing? I'm going to roll over a little bit of my IRA and I'm going to buy real estate.
Yeah.
He said, well, you can't do that. And I said, okay. And so the guy calls me back and he says, hey, he called me. Can you call him back and help him through this a little bit?
Understand this, yeah.
So he picked up the phone and he actually had a conversation with me. And he said, the tax code does not allow, it doesn't have real estate listed as one of the things that you can invest in with your IRA. Well, I knew that he hadn't read the tax code because, again, it doesn't say what you can do. It just says what you can't do.
Yeah.
So I told him, I said, tell you what, I will pay you $1 million if you show me the tax code where there's a list of things that you can buy. He says, of course it says that. I said, easiest $1 million you're ever going to make.
Yeah.
Of course, he never called me back. And so he just didn't do it, right? He didn't send the money. Well, my guy's no dummy, running, Time Warner. So he calls me, says, I'm coming in. We're going to redo that paperwork. And guess what? We're rolling over $5 million into the self-directed because I'm going to do some other stuff. So that guy lost a $5 million account because he didn't want to learn about something outside of his box, right?
Right, yeah.
Most financial advisors are not like that, but he was. And in the next 6 months, I had been to almost every broker in town to speak to their people about how to handle that question if they get it, because they didn't want that to happen to them. So that's why I get most of my business now from financial advisors,
Yeah.
which is against their interest because they're losing money. Well,
Right.
not losing money. They're giving up some of what they have under management that they get paid for, but only because they keep the rest of it,
Yeah.
right? If they say, no, I'm not doing that, they know they could lose the whole thing
Yeah.
because that IRA holder decides who's got it. They can move it anytime they want. So
But
that's one of those things that most people don't really understand how that works, that I spend a fair amount of time doing.
And it's silly that people have that kind of mindset, right?
Yeah,
like
it
that financial
And like I
planner
said, most
did,
of them
right?
are not
And
like that.
Yeah.
But there are some that will just flat out tell you can't do that.
Yeah.
I'm like, well, but it's
Yeah.
false.
Yeah.
Of course you can.
Right.
So, anyways, that's another area that does always generate some interesting scenarios.
Yeah. So every time I do one of these podcasts, I think to myself, probably ought to do more than an hour, on these podcasts because it's been an hour. Can you believe that, Todd?
I cannot believe that.
Already. So kind of close up the podcast. What would you like to tell the audience that might be listening that we haven't covered yet? What kind of things would you like to share?
I don't know if we haven't covered it, but just summary, if you're facing, so let me put it this way. People say, when does your phone ring, right?
Yeah.
My phone only rings when somebody is facing a capital gains tax situation. It's that simple. It doesn't ring otherwise. If somebody's selling something that there's no gain or there's a loss or they're not really selling something right now, my phone doesn't ring. But my phone rings when somebody says the good news, bad news. Good news, you're about to sell something for a huge gain, which is also the bad news. I tell people, congratulations on your tax problem, right? That's so if anybody's facing that situation on the sale of anything, real estate, business, whatever it is, don't just assume you don't have any options and get your checkbook out and start writing big checks. Give us a call. I bet you we can come up with something to where maybe it doesn't sting so bad.
Yeah. And I'd second that. So Todd's the best in the game at this. So if you need a 1031, you need a reverse. What did you call it? Reverse
accommodation.
Reverse accommodation. I'm gonna have to stop calling it.
Everybody else calls it reverse 1031.
Yeah.
That's fine.
And then the other, to have options. Todd is the best in the business. So how can people get a hold of you? We'll leave on the podcast too when we drop it. We'll leave your contact information, things like that. But those might be listening and want to take some notes right now. How's the best way to get a hold of you?
Well, easiest way is call the office, 615-771-5143, or toddjacksonlaw.com, or PXS, Property Exchange Services, PXS1031.com for the 1031 website.
Okay. All right.
You find us, all lead to us either way. Best way to find us.
Yeah. All right. Well, hey, I really appreciate you coming on, Todd.
Thank you for having me.
It's always great, and I can guarantee you this will be one of the most listened to podcasts of out there because people really want to know this kind of information.
Glad to do it.
So appreciate having you. Thanks, Todd.
Thanks.